How's it going, everyone? Welcome back to AZ Trading. And yesterday was Wednesday, the 23rd of November, where you would have noticed that we had a huge influx of news events, which caused this highly volatile yet ranging price action that looks at first glance very messy. But within all of this messy price action, the pattern that we look for is the RMR pattern. And using this pattern, we would have been able to find this long entry right over here, as well as a short entry from over here, and even this third long entry, capturing all of these moves. And at the end of the video, I'll show you guys how I do a bit of back testing that can really help when you're trying to identify the RMR pattern. So we have 3 trade examples here, and you know I'm not just a hindsight educator, and I like to show this pattern being executed on instead of just telling you how to use it, which is probably the #1 separator between most educators. They just show some back testing and replay examples, and they don't have any executions to back it up. So in fact, we did take one of these 3 trades, and I'll just turn on my executions and the labels. So here are those little arrows and the labels, where you can see we've taken our entry position around here. We've had our stop loss at the top of this raid, taken a few partials along the way, with 10% of our position to run and getting stopped at our break-even level. And what do you know, this exact bearish leg in price that occurred on the S&P was the exact trade that ICT took. However, the difference between me and ICT is I took my trade on the US 30, which you can see had a stronger bearish leg, breaking the swing low over here, whereas on the S&P, that swing low down here was not reached. And now I'll cut to a very quick video on that trade by ICT.
I'm moving still, getting some things done. And it just fell short of running out my sell limit, so I'm just going to close it here.
So you just saw his video, and this was his trade, and you could hear him mention that he wanted to aim for these lows, which were very close but didn't reach. However, on the US 30, you can see that those lows were reached and much further. And this wasn't a fluke or luck that I decided to short the Dow. This was due to a relative strength analysis. And I get quite a few comments on how to do a relative strength analysis, so I'll show you guys how I did it for this trade. But first, I've just got a few things that I'd like to mention. Over on my YouTube channel, I posted a little poll for when you'd like me to do a live trading or Q&A session. So if you haven't voted and you're interested in this live trading session, head to my community tab and pick a day that you'd like me to stream. I wrote a note in here saying that next week has a lot of high impact news events. Here you can see that literally on every single day, except Monday, we have a high impact news event. And on Friday, we have that NFP. So I thought that those days would be very interesting and informative to discuss. But you guys are all voting for Monday, the only day with not much news. But I guess if you really want me to stream on Monday, then sure, I can do that. Alright, and final message before we get into the trade is on TradingView, they've got this Black Friday sale, which is 40 to 60% off, which is a very big discount. And they have 3 separate plans, the Pro, Pro Plus, and Premium, but I've just opted to get the Pro since this covers all that I need. But there are actually quite a few benefits when you get the Pro version. One of the coolest ones is you get this window function where you can have multiple windows, and you can also use multiple browsers. Because if you have the standard plan, if you have 2 browsers open, it'll only let you access one at a time. So having 2 windows open at the same time, you can have the same chart at different time frames, or you can have 2 different markets. So here we've got the Dow on the left, S&P on the right. And for example, you can see that over here, S&P made a much higher high. However, here on the Dow, we made a lower high. So if we're looking to short the market, if we short the Dow and if we short the S&P, we can expect a larger bearish movement on the Dow and a smaller bearish movement on the S&P. Another cool function you can do on the Pro version is use the replay bar. So I can select anywhere to replay, and it gives a more authentic backtesting experience. However, if you already know what's going to happen, then it kind of ruins the experience. So you got to like scroll back without looking at the front, and then start your replay, and then you can experience live price. The only difference is you can't watch every single candle paint. When you skip forward, each candle paints the next one completely. So as we're scrolling through price, we can see that price has made a lower low. So this is the raid section. And after the raid, we wait for that market structure shift. And you can see that right now, price has made a swing high. So we need price to break a swing high for a market structure shift. We scroll through. Okay, now we've seen that price has broken a swing high, so we've had that bearish raid. Now we have that market structure shift. And after the market structure shift, we wait for a return within a gap. So we've got a gap down here. We scroll through price once more. Price is getting close to that return area. You can see that price made another swing high over here, which didn't raid this previous swing high. which means that resting above the liquidity here was not taken, so more liquidity is now generated, so this is becoming a very big magnet in price. Okay, we see that price has now retraced into that return area. We can place a long in here with our stop loss at the bottom of this raid, bottom of this swing. And as we scroll through price, let's see how price reacts to that return area. And we have a very large bullish movement. And the price action that created this bullish movement was within a RMR pattern. So this is one way you can use the replay function. It just makes backtesting a bit more authentic, because usually when I backtest, I just scroll back and I look at price and I drag it through and through, but it's just a bit different, if you get what I mean. And just a couple other functions. You can set 1 alert when you're on the standard plan, but when you're on the pro plan, you can set like 5 or 10 alerts. You can set many. So if you want to check out that pro version on TradingView, I'll leave a link at the top of the description. And if you sign up with my link, you'll be supporting yours truly, AZ Trading, and it'll just encourage me to make much more helpful content for you guys. Alright, enough getting sidetracked, let's get into how we found this trade that I took and some improvements that I could have made. Actually, I've never taught with the replay function before, but I feel like now that you've actually seen my executions, there's more merit when I use the replay function. Yeah, let's try that. And just for some context, I'll zoom out to a 4-hour chart, and you can see that we've got these very key higher time frame equal highs at this red line. Alright, now into the replay function. This is pretty exciting. I've never really used this function too much because I'm so used to just simulating it by dragging my okay, anyways. So what did I see as price was traveling around here? Price broke through this daily equal high level. However, it only broke through a very little amount. So I'd argue that above, the liquidity up here has not been taken, and instead it's actually generated more liquidity from this swing high. Because it might seem like this area became a trusted area of resistance, people would be shorting. So that's why for me, this was not considered the raid. So as we scroll through price, now we can see that undoubtedly this price leg would have taken the liquidity above those swing highs. So this bullish leg we'd consider the raid, and after the raid we look for a market structure shift, so a swing low to be broken. I'm just going to scroll through price. I have no idea how fast it's going to go, but we scroll through, we keep going. So now we see that price has made a swing low. This was the swing low that I see, and if price breaks this swing low down here, that'll be my market structure shift. However, preferably, if price breaks this low down here, this would be a much more decisive market structure shift. So we scroll through price and okay, now we see that price has broken a swing low. This was the market structure shift. And you might be wondering, why didn't I place my entry in this return area as price shifted and then retraced to that return area? Well, this is the exact limitation of the replay function where you can't see this candle forming. But if you're watching this candle live at 10 o'clock, you would know that this candle actually wicked up first before it broke structure. So instead of price shifting structure first and then going to that return area, this candle actually went to that return area first and then shifted structure. So that's the reason why I didn't participate in this area. So instead, I'm waiting for the next candle to form to see if a gap is created. And as we see, we have a gap over here. It's been created. And so this is my limit order right in here. So as price moves on, you can see that this next candle, it wicks into this gap. I don't know why my executions aren't showing in the replay function. I think they should include that. But anyways, I had my entry in here. I had my stop loss at the top of the raid over here. But another note that we have to keep track of is at the time of our entry at 10:03, if we're looking to place a short, we need to use relative strength analysis to find the weakest of the indices so we can take advantage of a likely more larger bearish movement. Of course, you don't need to use relative strength analysis, but this is just something that has helped my trading and helped me capture larger moves, and is not a very difficult step considering the results that it can produce. So if I draw a fib from the top of the raid to the bottom of that shift, you can see that price retraces above 40%, whereas here on the S&P, if I draw that same fib, and at 10:03 where our entry was, price retraced much higher, which is almost at 80%. Honestly, you don't even have to draw a fib to see this. It's pretty obvious to see over here, Dow from 945 is making lower highs, and S&P at 945 is making higher highs. So obviously S&P is stronger, Dow is weaker. And once again, here on the Nasdaq making higher highs, Dow making lower highs. So that's how I did a relative strength analysis. It was very obvious to see in this example, which made it very clear which one to short. So once again, place my short entry there. We're going to scroll through price. I'm just going to scroll very quickly. because we know what happens. And in hindsight, we can see that if we still use this original upper gap area for our entry, then it would have been a much better price. However, since I've already allocated my full risk exposure in my initial trade, due to the rules that I have in my trading plan, I did not allocate any more risk and didn't open any more trades. So we continue to scroll through price. Okay, this clicking thing isn't gonna work. Let me just get out of the replay. Okay, so as we scroll through price, oh my god, so much easier. You can see that we've actually gone through quite a bit of drawdown during these areas. However, that's exactly what they are. They are periods of drawdown, but they're not areas of invalidation. Because our stop loss is at an area where if price reaches that area, this would invalidate our trade idea. And if price is just going through drawdown and ranging within this area, this trade idea has not been invalidated and is still valid. So during these times, there is no need to get out of your trade early, to protect your risk early. We've established and accepted the risk, and we'd just be doing ourselves a disservice if after all that analysis to find our entry, we just decided to get out early. And finally, we scroll through price once more, and you can see that price finally starts breaking down lower and reaches a swing low before midday New York. So very quickly, the partials that I took in this trade, if we look to the left, we have a gap over here. When this gap was filled, I took off my first partial. My second partial, if you look to the left, once again, there's another gap over here. And finally, this third partial, if you look to the left, we have this swing low over here. And once I took off my third partial there, I had 10% of my position to run. It was 12 o'clock, so I thought to myself, generally after 12, volatility has dropped off, especially in the Forex markets, a little less in the indices. So at that point in time, I reduced my stop loss to break even, and I decided to go to bed. So when I woke up, I'd either be stopped out, price would be ranging, or price would have dumped and our little partial would have been doing work. However, little do we know, only a few hours later, this was just a very volatile, rangy day, and we got stopped out at break even. So overall, this was the RMR trade, and I'll just remove all the annotations so you can take a screenshot of the naked chart so you can outline the RMR yourselves. But I did mention at the start of the video, the RMR pattern can be seen making a long over here, which I showed, a short from over here, which I executed on and explained, as well as another long that you could have taken over here. So I'll just do another quick backtesting example using the replay function that'll show how the RMR pattern can help you find this bullish move over here. But once again, this is a hindsight trade. I'm not trying to tell you that I executed and that I saw this in person because I was asleep. So if I did see this in person, I must have dreamt it. But then again, if I was dreaming of anything, I was probably dreaming of price action to just completely dump. Okay, anyways, let's get the replay function and let's start over here. Wait a second, when I use the replay function, it actually keeps my drawings on the chart. So it looks like I know the future. Oh my god. Hey guys, this is Easy Trading, and today I'm gonna guess the market's gonna go here, and then it's gonna pump, and then I'm gonna show you how much money I made and flex all my cards. So here we go, price is going, here it goes, it dumps, and there we go. And just like that, I've proven that trading is very easy, and all you need to do to capture moves like this is buy my trading course. Okay, I'm taking this a bit too far. That was a joke, by the way. Alright, let's take this backtest a bit more seriously. I'm just on the 5-minute chart, and you can see that price has raided this swing low down here, and this is where we'll start the replay. So once again, using the RMR pattern, we have this raid, and after the raid, we need to see a market structure shift. So a break in structure, a bullish structure shift. So this would be a short-term bullish market structure shift, and preferably we'd like to see a structure shift above this high, which would be much more decisive. So we scroll through price, and you can see that price has shifted structure, breaking this swing high. This is that market structure shift. And during that MSS, we have a gap that's been printed, a 5-minute gap in here. So what we can do is we can place a limit order, or we can set an alarm. And typically I always set an alarm. So when price retraces into that return area at 1350, if we do a very quick strength analysis, we can see that on the Dow, price made a higher high. Here on the S&P, you can see that price also made a higher high. And here on the Nasdaq, price also made a slightly higher high. So during these cases, when relative strength is very, very similar, these are the times you can choose any of the 3 indices to trade, since they'll all likely have a similar bullish reaction. It's just the times when relative strength presents a big difference, like this one where Dow was obviously making lower highs and S&P was obviously making higher highs, then we want to take advantage of that. But in this case, they're all quite similar, so we can choose to long any of these. So if we place our entry or limit order within this gap, and we have our stop loss at the bottom of the raid down here, and we could set an objective above, perhaps at this gap here, perhaps at some swing highs, perhaps at this swing high, etc. This would be an RMR setup, and then we can scroll through the replay function to see how price reacts. And you can see that price would have respected this RMR pattern as well. Alright guys, that'll be it for this video. If you made it this far, thank you all so much for watching. You're one of my favorites, and don't tell the others. But if you enjoyed this video or learned something new, give it a like and subscribe. It makes me very happy. Don't forget, if you want the replay function and the multiple windows and stuff, use my link at the top of the description and you'll be supporting this channel. But yeah, leave a comment if you have any questions. But until next time, take care everyone. Peace.